What does cash flow mean in real estate? I mean, you hear it all the time, right? And you hear it used outside of real estate too. And it's easy to get confused because it doesn't necessarily mean the same thing in every capacity. Well, I'm going to tell you what cash flow means in real estate right now. You ready? Let's go. When it comes to rental property investing, your cash flow is the net amount of money that piles up in or disappears from your bank account each month. And that's to say real estate cash flow can be positive or negative. For example, if you're pulling in $1,500 a month in rent and your mortgage, taxes, insurance, and property management fees are, running $1,000 a month, your net cash flow is $500 a month. That's what it is. That's how it works. But let's go deeper. And I'm going to ask you a simple question. Would you rather have money in the bank today or entertain the promise of seeing money in the bank at some point in the future? If you chose the former, then welcome to the Real Estate Cash Flowing Investing Club. Today money is something that a certain kind of investor tends to prefer over uncertain but potentially lucrative long-term appreciation. Cash flow can be very helpful to an investor because you can put cash flow to use in other projects and ventures right away, or it pays your personal bills each month. Other types of investors are often more focused on whether their property has the potential to appreciate, and that will mean for their equity position. And these investors are generally willing to wait and get the bulk of their expected financial return upon sale. And while real estate markets have historically gone up at about double the rate of inflation, there are pronounced down cycles too, which are difficult to predict. Investing for future appreciation alone, that can be tricky, unless you are a committed and strategic long-term buy and hold investor. This is where the cash flow approach to real estate investing comes in, which prioritizes money in your bank account now, ready to be deployed for other investments or simply spent on things that you value in life. And then when done right, you're likely to get the long-term appreciation too. So let's dive in, and I'm going to show you how to produce and maximize your real estate cash flow. And then I'm going to finish up with some very real risks that you're going to want to watch out for. Oh, and by the way, if you're still looking to get that first deal under your belt, I put together a free training just for you to help you get that first deal done. And then how to earn $5,000 a month flipping contracts and properties, working in as little as 1 hour a day. And you can access it at mattsfreetraining.com. All right, exactly what is cash flow real estate investing? Well, one way to think about cash flow investing is to compare it to investing in dividend-paying stocks. At regular intervals, you receive cash distributions from the investment while doing very little, if anything, with the asset that you've purchased. A quick example might look like this. So Mary owns 3 rental properties that each rent for $1,000 per month. Her expense ratio, and this is the percentage of gross rental income used for normal operating expenses like maintenance, property taxes, vacancy, insurance, and property management fees. That ratio typically lands right around 40% of the gross rental income. So Mary, she also set aside 5% each month in a capital reserve account for emergencies and incidentals. Very smart of her. So Mary's monthly cash flow is $3,000, that's the $1,000 times those 3 homes, less $1,200, that's 40% times the 3,000, less $150, that's 5% times those 3 properties, equals $1,650 per month. Sounds pretty good, doesn't it? But there are ways that cash flow investors may be able to further increase their income every month. And I'm going to give you 3 winning examples of that. 1, you could raise the current rents to market rents. Every year Mary pulls market rent comparables to make sure the rents she's charging her tenants is at least on par with the market. She learns that rents for properties comparable to hers are going for about $1,050 per month. So when she renews the leases, she also raises the rent at all 3 properties to the market rate. The result, her income goes up. And assuming her expenses stay the same, the result is as follows. New cash flow is $1,650 plus the $150 equals $1,800 per month. Now typically, expenses are more static than rents. So as you raise rents, your mortgage, taxes, and insurance costs often decline as a percentage of the gross rental income. There are nuances to this, but as a general rule, this is often the case. And on a side note, the net cash flow landlords are receiving, it's rising rapidly in the current market. And based on supply and demand, it's going to keep increasing at rates that we haven't seen in a really long while. So owning income property is a good place to be in right now and will be for the foreseeable future. So if you don't have any yet, might want to get some. The second way to maximize your cash flow is to reduce your operating expenses. So after Mary brought her rents to the market rate, she recognizes that she might be paying more than necessary for landscaping and lawn care. And so she's able to trim some of those costs there. Mary reduces the monthly operating expenses on her rental property portfolio by $70 when she hires a new lower cost landscaper. Her new cash flow, $1,800 plus 70 equals $1,870 per month. It keeps getting bigger, doesn't it? Now the third thing that she can do to maximize her cash flow is to add value to the rental property. So far Mary has increased her cash flow by $220 per month, but she's not stopping there. You see, Mary decides to convert the spare room above one of her rental property's garages into a studio apartment that she quickly rents out for $300 per month. Her new cash flow now, $1,870 plus the $300 equals $2,170 per month. By bringing her rents to market, cutting landscaping costs, and adding value to the rental home, she increased her monthly cash flow by 32%. Now, if you can see how making just small little adjustments to income and expenses can have a big impact on your returns, let me know by clicking the like button. And if you take your real estate investing seriously, make sure that you're subscribed to the channel as I post cash flow tips like this each and every week. Now, there are some risks of negative cash flow, and here are 3 cautionary examples. In the real estate investing business, when more cash flows out than in during a given month, that's what's known as negative cash flow. And I'm going to give you 3 costly cash flow mistakes that some real estate investors make. Number 1, paying or borrowing too much for the purchase. This is a common mistake that real estate investors who focus on appreciation are susceptible to making. Overpaying for an income property results in extra large mortgage payments that can go on for years. And if market rents don't increase steadily, investors can find themselves barely able to cover the property expenses. For example, if your monthly rental income is $1,000 less $400 in expenses, less $50 in reserves, and then less a $500 mortgage, you're left with a mere $50 of monthly cash flow. Now, what happens if a tenant leaves and it takes 1 month to find a new one? 0 rental income for a month, less $950 of expenses, and that gives you a $950 negative cash flow. Then once you find a new tenant, it's going to take you 19 months to recoup what was lost during only a single month of vacancy. The second mistake, choosing the wrong tenants. Some investors are so anxious to get a vacancy filled that they neglect pulling a thorough tenant credit report and running a thorough background check. Let's assume for this example the following scenario. Monthly rental income is $1,000 minus $750. That's our 40% expense ratio plus 5% reserve plus 30% mortgage payment. That gives us $250 of cash flow. Now, let's say the tenancy goes bad. The tenant disappears in the middle of the night without paying the current month's rent, takes all of the appliances with them, and leaves behind $2,000 worth of damage. It takes 1 month to make repairs and re-rent the property. That would equate to $0 of rental income, less the $750 of normal expenses, less $3,000 repairs and new appliances, and that will leave you for the month with $3,750 of negative cash flow. While situations like these can happen, you can indeed minimize these and practically eliminate your exposure by doing your homework and checking references before signing a new tenant. So if cash flow is important to you and your goals, then minimizing downtime that results from non-paying tenants should be a priority. Now, the third mistake is overspending on expenses. Some real estate investors spend too much on items like landscaping and business operations and fancy renovations. While this approach may produce the best looking property on the block, very few tenants will pay an above market rent in return. Most tenants just want a nice enough place to live in and call home. A nicer looking place may cause a property to rent faster, but rarely for more. It's just basic math. When landlords spend more on expenses than the rental income will cover, the result is negative cash flow. Now, expenses you could be overpaying for, they include insurance. Be sure to shop around annually. Advertising of vacancies when you're looking for new tenants, and then landscaping, shop around and minimize the frequency, and then property management. You want to self-manage or negotiate lower rates over time. And then there's the utilities. Use energy efficient appliances. Give tenants incentives to reduce their use. As with any real estate investment, due diligence can make or break a property and your business if you're not careful. Your answers will always lie in the math. So do the simple math to get a better idea of the cash flow that you can expect. If you're in the market for income properties that cash flow, where the math is all done for you, I've got some free information for you. Download an investor's package at cashflowsavvy.com. And if you like what you see, you're going to have the opportunity to pick a time for us to hop on the phone and strategize your passive income retirement. And it all starts at cashflowsavvy.com. That's it for now. Thanks for watching. Take care. I'll see you soon.